Good afternoon, everybody. This is Andrew Wilkinson, Director of Trading Education, coming to you from New York State. And I'm delighted to have with me today Ed Egilinsky, Managing Director and Head of Alternative Investment at Direxion, one of the ETF companies that we do, that our clients at Interactive Brokers do plenty of business with. And Ed is here today to talk about a couple of things that are relevant to something that we're all doing at the moment, which is working from home and thematic investments surrounding that. So just before I hand over to Ed, just a couple of important pieces of housekeeping here. We're recording today's session, and it will be available online at the Interactive Brokers website under the education menu later on this afternoon. So it will be under education, webinars, previously recorded events, and then industry sponsored. And you'll be able to find the event, no problem. You can access the handouts that Ed's going to go through from the GoToWebinar panel at any time. And then finally, there are questions. If you wish to submit a question, please type it into the question panel in the GoToWebinar controls there, and Ed will get to them either during the session if he's keeping an eye on them, or at the end we'll have a quick Q&A and go over everything. So if you'd like to advance the slide, Ed, to the direction pack, I'm going to put myself on mute and say a great welcome to you here. Ed Egilinsky from Direxion. Over to you, Ed.
Thanks, Andrew, and value the long-term partnership with Interactive Brokers. I have to say, though, for everybody listening, as you could guess by now, I don't have that great accent like Andrew does. But in any event, welcome to today's webinar on investing in breakthrough companies. And today we're going to explore two major investment themes. One is, as Andrew alluded to, the evolution of remote work and how this is not just a short-term trend, but a permanent shift in what defines the workplace. Now, as we all know, COVID was the driver for the remote work revolution to take center stage, but digitalization was already becoming more prevalent before the pandemic. The second thing we're going to explore is how one can invest in next generation companies that are innovators and disruptors of various industries, such as nanotechnology, alternative energy, electric vehicles. Now, both of these investment themes are potentially different ways to generate additional sources of returns outside of your traditional stock and bond benchmarks. Now, no presentation is complete without the appropriate disclaimers. Please review the prospectus and corresponding materials before making any investment. Now, for those of you who are unfamiliar with Direxion, we are a leading provider of cutting-edge strategies, including thematic ETFs, for over 20 years. We specialize in providing exposure to and tracking rules-based indices. I have been with the firm for almost 11 years, and I'm part of the senior management team. There's been a significant growth over the last year with thematic ETFs, and our firm has two popular ones, being work from home, WFH, the symbol, and Moonshot Innovators, symbol MOON, Moon. Now, the first investment theme we will discuss is remote work. Our work from home ETF provides exposure to a basket of different stocks that can benefit from a virtual work environment. Although there is hopefully light at the end of the tunnel with a vaccine, the majority of businesses seem likely to keep a hybrid work model in place where work from home is going to become part of a typical work week as we move forward. Now, this slide encapsulates how connectivity has taken on a whole new dimension. The ability to perform different functions remotely from any place gives us the opportunity to cut down on travel and maintain an active presence regardless of where you're situated. Flexible work environments, along with remote functionality in various life activities, can improve and overall quality of life and generate more free time. For those who are environmentally conscious, remote work and connected consumer options reduce the need for car travel and thus would help in the reduction of emissions. In the years ahead, we can expect these efficiencies to become more commonplace and affect the way consumers and businesses interact with each other. A couple of statistics to show that help support the narrative of where the puck is headed, if not already, when it comes to a flexible workplace. Over 40% of American workers surveyed do some remote work. Over 50% of companies plan to make a remote work option permanent. Since the COVID epidemic began, a 33% increase in remote work has taken place, with now over 42% currently working outside of the office. Now, this next slide accentuates the millennials, and there's certainly an age demographic that remote work is in their DNA. This is a Deloitte survey that showed that although 43% of millennials have the ability to work remotely, that 75% of those surveyed preferred that to the office. 80% of respondents, if faced with two similar job offers, would turn down the one that didn't offer the remote work option. Many business leaders feel a flexible workplace can help reduce both capital and operational expenditures. Now, this next slide, remote work doesn't necessarily mean working from home. This recent survey done by IWG, which is a main competitor of WeWork, has shown that the majority of businesses prefer flexible workplace as a way to cut costs and actually improve efficiency and productivity. IWG provides well-designed business space that can align in close proximity to an employee's home. Even the founder of IWG has stated that more and more businesses are embracing flexible work environments to cut down commuting for their employees. Now, this next slide, some of you are familiar with these two individuals. They're notable corporate leaders that have been vocal about the flexible work environment being here to stay. This is being reinforced by numerous publicly traded companies looking to downsize their commercial square footage as it helps mitigate overall expenses while feeling it does not lead to a drop-off in productivity. A lot of sectors, such as the technology sector, were offering employees to work remotely well before the COVID crisis began. For example, the likes of Jack Dorsey that are shown here. Companies feel that they still can maintain a strong cultural identity without always having to be physically present. Now let's discuss some of the inner workings of the Direxion Work From Home Index. The Direxion Work From Home ETF, symbol WFH, tracks a rules-based index called the Selective Remote Work Index. This index includes four major pillars: cybersecurity, cloud technologies, remote communications, and online project management. This strategy equal weights 10 stocks within each of the four pillars for a total of 40 stocks. Our Direxion Work From Home ETF was launched in late June. It is the first of its kind ETF providing exposure to those stocks that can benefit from a flexible work environment. It has been one of the more successful ETF launches in 2020 with over 150 million in AUM. Since it's an ETF, that means to you it trades no differently than a stock. Again, the symbol is WFH. It seeks to track the Selective Remote Work Index. This is a quantifiable, rules-based index that is verifiable and repeatable. The fees are 45 basis points annually, and of course, before making any investment, please read the prospectus carefully. So when looking at the Selective Remote Work Index, it follows a couple of guidelines. One is eligible stocks have to meet a minimum trading volume threshold to be considered. Secondly, the index is made up of 40 stocks that are equal weighted. It ranks the top 10 stocks within each of these four major pillars, again, of cybersecurity, remote communication, document management, and cloud computing. The 10 stocks within each category are determined by an algorithm that identifies keywords or phrases from publications and regulatory filings that best represent each of these categories. This next slide shows the current 40 stocks where the four major pillars have 10 stocks within each of them. When looking at these group of stocks, you are participating in technology stocks that are part of the ongoing digital and virtual revolution that is here to stay. Some examples of usage in everyday life we're going through right now. For example, in the online project and document management category, a lot of people are using DocuSign or Adobe Docs. When you look at the cybersecurity category, more people than ever before are being connected virtually. Security is paramount. In fact, the Biden administration, one of their focuses is on cybersecurity and cyber attacks. And FireEye is one of those companies within the cybersecurity bucket. In the remote communication space, it's becoming almost a way of life to communicate with your colleagues with the likes of Zoom. And for those of you who, of course, that don't live in apartments and live in homes, Ring Central is something that is being utilized. And in the case of the cloud, a lot of people have used Amazon and the AWS services that provides. Although some of the companies within this index have had outsized returns in 2020, there was still roughly 13 of the 40 stocks within this strategy that had a negative return in the 2020 calendar year. Not all of the stocks that make up this strategy will necessarily move in tandem, as evident by last year. So despite the work from home ETF being up over 50% since late June, there is still opportunity on both a short and longer term basis due to the diversity of stocks within this ETF. Now, this next slide provides a breakdown of the market cap weightings within work from home. For simplicity purposes, a mega cap stock is defined with a market cap of 200 billion or more. A large cap company has 10 billion plus. Mid cap is defined as anywhere from 2 to 10 billion in size, and small cap represents anywhere from a few hundred million to 2 billion. The work from home ETF currently is slightly tilted towards mega and larger cap names at about 60%. The balance of the portfolio is made up of mid and small cap names, which are combined at around 40%. Now, some of the mega cap names include the likes of Microsoft, Cisco, Google, all names that we are familiar with. Now, with markets at near all-time highs, investors are concerned about current valuations and are they sustainable? This slide shows current metrics reflecting valuations of work from home, the index relative to the S&P 500 and the NASDAQ 100. As you can see, although price earnings are elevated right now within all the categories, the work from home index, the Selective Remote Work Index, has growth rates that can support a higher multiple. When comparing the Selective Remote Work Index to the NASDAQ 100, which is also heavily tech weighted, the price earnings of work from home or the Selective Remote Index is actually less with higher growth metrics. In addition, its price to sales ratio is low relative to the S&P 500 and NASDAQ 100, meaning it is more reasonably valued based on this statistic. These are the current top 10 holdings within work from home. You can see it is a mix of different sub-industries. The top 3 holdings happen to be mid and small cap names. What's interesting is the top holding within work from home right now is Plantronics, which is the headset maker. That stock was actually down in 2020. Last week, Plantronics had earnings that were better than expected, and the stock rallied. So this is just one example of a stock that hasn't participated as of yet in the work from home opportunities. Now, there's been tremendous interest in our work from home ETF. As I mentioned, it's already 150 million since its launch 7 months ago. Even though a vaccine is thankfully here, the remote work revolution is here to stay. This is evident by our work from home ETF recently being at its highs and up over 50% since our start in late June. And it's up already about 9% in 2021. Now, Direxion was the first to market with a way to invest in a basket of stocks, which can potentially benefit from the flexible work environment. So our work from home ETF focuses on the 4 major drivers of the remote workplace through investments, again, in cybersecurity, remote communications, cloud, and document management. Here is a one-stop solution to investing in those work from home remote work stocks that you want to participate in. So let's shift gears and talk about another investment theme that is currently resonating in the marketplace with investors, is how to participate in early stage innovative companies within a new age economy. Some of these public company businesses are aligned with the new administration's initiatives. This includes areas such as alternative energy and electric vehicles. Now, the word moonshot is being used in this instance as companies that have the potential to knock it out of the park. The expression shoot for the moon, for the purposes of this presentation, represent those companies that are cutting edge and have tremendous growth potential. Now, in the immortal words of President Kennedy, shooting for the moon was a call to Americans to reach for the stars. This was meant as a mantra for the American people, but also more specifically in the quest for America to be the first to reach the moon. In the case of today's companies that seek to break barriers by being innovative through either pioneering in an area or taking it to greater heights, is what the companies within our Moonshot ETF are trying to represent. These companies are disruptors in the sense of pushing the boundaries beyond the status quo in pursuit of advancement. What are some industries that are part of the Moonshot spectrum? These are areas like smart cities, autonomous and electric vehicles, genetic engineering, all representing groundbreaking and society-changing breakthroughs. Companies that are engaged in these infancy stage industries can potentially represent greater growth potential and infinite possibilities. Now, in the context of investing, not all your choices will necessarily produce your desired results. So it's important to spread your risk out and participate in those groundbreaking companies that can achieve results and monetize them over time. That is a very difficult task to achieve on your own. Even private equity firms, which assess startup opportunities for a living, know that only a handful of their investments will work out. They are calculated in what they invested, knowing full well that only a handful of these choices will lead to the majority of their gains. Now, by having the opportunity to invest in a basket of moonshot type of stocks within one portfolio enables you to participate in cutting-edge companies in a disciplined, rules-based approach where all your eggs aren't necessarily in one basket. One area of emphasis and the growing market is smart transportation. Certainly, smart transportation has taken many different forms. We currently have electric vehicles with the likes of NIO. We are now taking this to the next level with the development of autonomous vehicles. Drones are now starting to be utilized more, including with Amazon, when they're taking inventory in their warehouses. Even companies like Lyft are now making ride-sharing travel instantaneous, whereas just a few short years ago, we were hailing cabs. Food delivery and shopping has taken on a whole new dimension as well in the rideshare. Lyft, which is one of the stocks currently within our Moonshots ETF, had earnings yesterday and rallied to new 52-week highs on hopes that the worst of the pandemic is behind them. Alternative sources of energy is certainly a focus for the Biden administration with their green initiative plans. Part of that plan is to reduce oil consumption and replace it with alternative sources of energy. Now, these type of companies that are in Moonshot can move the needle in the battle with climate change and potentially lessening carbon emissions. For example, using fuel cell power plants to generate electric power is the main business focus of fossil fuel. That is one of the companies within Moon. Another stock currently within Moon is Plug Power. They develop electric forklift trucks that can handle equipment used in retail and grocery distribution with the likes of a Walmart, FedEx. Their ability to create electricity from hydrogen gas without combustion provides an alternative energy source that is more eco-friendly. With tighter global auto emission standards being enacted in Europe and China, PowerPlug has been front and center as they recently announced a joint venture with Renault to employ hydrogen fuel cell powered commercial vehicles. Another major theme captured in the Moon ETF is the human evolution. Human evolution encompasses a number of different ways to improve one's quality of life. One example of this is robotics. These are designing machines that can help and assist humans. Wearables, smart electronic devices that are worn on or close to the skin. Genetic engineering, the manipulation of organisms' genes using biotechnology. Nanotechnology, the use of matter, whether it's molecular or atomic, for industrial purposes, such as 3D printing. All of these human evolution sub-industries can be part of the Direxion Innovative Moonshot ETF. One example in the human evolution space is pharmaceutical maker Inovio, symbol INO. It's a small cap stock that develops DNA-based vaccines for infectious diseases and cancer. Although this stock currently does not have anything itself FDA approved, it's partnering with some larger pharmaceutical companies on potential vaccines for the coronavirus and the dissemination of them. Inovio is currently part of the Moonshot ETF. Now let's look at the Direxion Moonshot Innovators ETF more closely. It seeks to track a rules-based index called the Standard & Poor's Kensho Moonshots Index. This could be considered a satellite holding within your overall equity allocation that can potentially generate an additional source of returns within a portfolio. The Moonshot ETF consists of early-stage innovative companies that are committed to research and development spending and a corporate culture that supports these initiatives. These type of innovative companies within Moon can potentially be takeover targets, as evident by Electronic Arts announcing the acquisition of Glue Mobile, a stock currently held within the Moon ETF. Now, more specifics on the index, as I mentioned, the Moonshot Innovator ETF, symbol Moon, seeks to track the S&P Kensho Moonshots Index. Now, Standard & Poor's S&P is a recognized global leader in the creation of rules-based indices. The S&P Kensho Moonshot Index adheres to a set of rules and is purely quantitative in nature. It's a disciplined investment approach. Now, some of the guidelines for the index are as follows. Companies must have a minimum market cap of 100 million to qualify. The average daily trading volume over 3 months must at least be $1 million a day. It ranks the top 50 stocks with the best combined score of the size that a company spends on R&D, which is normalized to their industry, combined with an algorithm looking at key innovative words and phrases that appear in companies' latest regulatory filings. So it's a combined score of those two metrics, and the top 50 stocks are then chosen for the Moonshot ETF. It rebalances the weightings and constituents on a semi-annual basis. And it is a modified equal weight approach where stocks with greater liquidity receive a higher weighting, with a max weighting of 4.5% to any one holding. Now, the Moonshots Innovator ETF has a broad exposure to different sectors and sub-industries. Currently, the portfolio has a significant weighting to the 5 major S&P sectors, including information technology, industrials, healthcare, consumer discretionary, and communication services. Within these different sectors, there's a wide range of cutting-edge sub-industries that make up the strategy. As I mentioned before, drones, genetic engineering, clean technology, wearables, 3D printing among them. Some of the top performers of the first few months of the ETF have been in the genetic engineering category, clean energy, and 3D printing. Now, the Moon ETFs consist mainly of up-and-coming companies, as evident by the smaller market cap makeup of the majority of the stocks within the portfolio. The median total market cap is less than 3 billion in size. The Moon ETF has only 15% in large cap stocks, and the balance is in mid and small cap names. That compares to the NASDAQ 100 or S&P 500, where the preponderance of weightings are to mega and large cap stocks. Now, this portfolio composition difference with Moon relative to other notable market cap weighted benchmarks make it a good complement within a portfolio, as there's not much stock overlap. The micro, small, and mid cap names tend to have more of an opportunity to generate significant growth due to not being mature companies. As a result, this could produce outsized returns for these type of stocks, and thus to the Moon potential. Now, Moon differentiates itself from other innovative and next generation ETFs by being rules-based. It's predominantly mid and small cap names. And there is no single stock concentration risk. Now, when comparing the Moonshot's index metrics relative to the S&P 500 and NASDAQ 100, there are a number of things to note. The Moonshot's index consists of significantly smaller sized companies. As a result, the price earning multiples relative to the S&P 500 and NASDAQ 100 tend to be higher as they have greater growth potential. The Moonshot index tends to have higher gross margins, return on capital, and price to sales when compared to the S&P 500 and the NASDAQ 100. The type of stocks that are within the Moon ETF tend to be higher risk reward type of stocks relative to these bigger market cap indices. This next slide shows the top 10 holdings currently in Moon. And as you can see, they're a mix of mostly micro, small, and mid-cap names that make up the top 10 holdings. These represent sub-industries from all different diverse type of businesses. Micro-cap stocks represent 4 out of the top 10 holdings. Those are very small companies. The weightings of the Moon ETF, as I mentioned, are a modified equal weight approach, where no one individual stock will be more than 4.5%, at least when it's initially allocated to. It could be higher based on performance in between when it's rebalanced, which is semi-annually. The Moon ETF is represented again by smaller cap names relative to other innovative theme ETFs that are more mega cap oriented, large cap oriented, such as having a Tesla or a Square in them. And they have concentrated positions, as I alluded to before in some cases. Now, as a recap, the Direxion Moonshot Innovative ETF, symbol Moon, M-O-O-N, tracks the S&P Kensho Moonshots Index. It's a rules-based approach to investing in innovative and disruptive companies. It's predominantly small and mid-cap names. It consists of 50 stocks, so it spreads out the risk in a modified equal weight approach. It's rebalanced semi-annually. The fees are 65 basis points annualized. And since its October launch, it's up almost 90% and 40% in 2021 alone. Now, despite these outsized returns in 2020, over 20% of the stocks within Moon were negative for that calendar year, and over 30% underperformed the S&P 500. In 2021, although it's only a month and change in, there are roughly 15% of the stocks within Moon that are underperforming the S&P 500 so far year to date. Now, before I turn it over to questions, I just wanted to give the audience an idea of our full lineup of strategic weight thematic ETFs that go beyond Moon and work from home. All of the ETFs listed here track a rules-based index. This includes our connected consumer ETF, symbol CCON, which is an extension of work from home that includes areas like virtual leisure, telemedicine, and online education stocks. We also have an equal weight NASDAQ 100 QQQE, where all 100 stocks are 1% weighting. If you're concerned about the fact that FANG stocks are too much of a concentration within your portfolio, here's a way to diversify by broadening out the spectrum of stocks that have an impact within the NASDAQ 100. We also have a broad commodity strategy that is tactical in nature. It's a 5-star within the Morningstar broad commodity space called COM. COM is the ETF. It's the Direxion Auspice Broad Commodity ETF. Reflation might come back into play at some point. Commodities might be an area to participate in. And before I turn it to questions, please check our website at Direxion, Direxion.com. And you could look under the strategic weight ETFs for more information on any of these ETFs. For individual shareholders, please call us at 1-800-851-0511. And again, before making any investment decisions, please make sure to review the prospectus and corresponding materials. I wanted to thank Andrew and the team at Interactive Brokers for putting this together today. And thank you for everyone's time today. And now I will turn it over for questions.
Thanks very much, Ed. That's a fascinating insight into a couple of the ETFs available from Direxion. There are not many questions. I'm going to go through them and see what you can answer. Ramesh asks, do you include the TSX in the compare index? I guess Ramesh is from Canada.
Well, we don't when we look at comparative purposes for this presentation. We use US-based indices. On a one-off basis, if he wants to call us, we can run those comparisons for him.
Lovely. So Ed, can you just spell out your email address for us, please?
Sure. It is Direxion.com.
I'm sorry. Give me the full email address we want people to go to.
Yes. If you have the www.
No, sorry, not the website. The your email address to get in touch with.
Oh, my email address. Sure. You could have it's Egilinsky, EGILINSKY, first initial E, at Direxion, Direxion.com.
Great. I've put that into the question panel there for people next to Ramesh's question. Egilinsky at Direxion.com for any follow-up questions. Let's see. Somebody asked the question, Michael, will the slides be available for download? Michael, yes, and to all the audience, if you look in the GoToWebinar panel, there is a section, an expansion section called handouts. You can download the event from there. And I believe, Ed, you probably follow up this event with an email to all participants during the week.
That is correct. We will be reaching out and providing additional information and where they could reach us for any additional questions they have as well.
Okay, and Wojcik, please type on the web. So Direxion.com, it's the same as in that email address for Ed.
That is correct. Andrew, I have one or two questions that came through, if you don't mind, that I could share with the audience. Somebody asked, how does Moon compare to other next generation ETFs such as ARK? And this is a good question. We created the Moon ETF to be a good complement to some of those other next generation innovative ETFs that are already in the marketplace, including the likes of ARK. And the reason I think it could be a good complement is for a couple of reasons. One is our Moonshots ETF has a different portfolio makeup than a lot of those other similar thematic ETFs, because we're more geared to small and mid-cap names. We're also rules-based in nature and not actively managed. And lastly, we have a modified equal weight approach versus some of the other types of ETFs that tend to have more concentrated type of positions. Another question I have, Andrew, is the remote work theme going to be relevant once vaccines take hold? Another good question. I think, as everybody knows, and Andrew alluded to it at the beginning, we're going through a societal change right now. The hybrid work model is here to stay. And part of that hybrid work model, of course, is remote as well. Now, the technology of these types of companies like DocuSign or Zoom are now part of the normal way to do business. So these are next generation technology companies that are going to be part of the landscape as we move forward. And as you might recall, the work from home ETF has 4 major pillars. And that's cloud computing, cybersecurity, remote communication, and document management. All of these were relevant before the pandemic, and now even more so as we move into the future.
That's a really interesting point you raise. I mean, I remember months ago, as we got into the pandemic and people were talking about, they were writing about this whole work from home theme. And as we're all digesting, how to fill our time and communicate and how the workforce had changed. I remember seeing an article, I think it was in the Wall Street Journal, but talking about, like welcome to the global workforce, the global labor force. And the point being that all of a sudden now there's no reason that you couldn't take a job in my case, anywhere in the world, in London, Berlin, Zurich, Sydney, as long as I was willing to work the appropriate hours. And it's very true, and it speaks to exactly what you just mentioned. But anybody's job is up for challenge if the employer is okay with somebody working remotely from whichever time zone they want, right?
Yeah, exactly. I couldn't have said it better myself, and appreciate those thoughts there on that. I think you hit it dead on.
There's a couple of questions come in about the minimum investment for these ETFs. Is there a minimum, Ed?
It depends on the platform. So with interactive brokers, Andrew, what are your typical minimums there?
I don't think we have. If I wanted to go, I was just on a demonstration with a client a few minutes ago before this event, and if he wanted to go and buy a share in Apple, he could do so.
Yep, I would say it's nominal, and of course, hopefully you're working with interactive brokers as a platform, and I'm sure you are. So,
question from Nigel: do you have a hydrogen ETF?
We're always looking for new, innovative types of themes. When we file for something, then we could at least disclose that it's coming. When and if we have something to share, we will make sure that is publicly released. But the answer is no right at this time.
Michael asks the question: how do you determine the expense ratio, indicating that it's high?
Well, we look at the peer group itself, and we assess that and try and at least take an average of that when we determine, especially with the thematic ETFs, what's appropriate. So we look at a number of different factors, including the peer group itself that we feel it represents, to help determine that.
POC asks a question: do you include OTC or pink sheet stocks in these funds?
No, not to my knowledge. Everything's on either the Russell, NASDAQ 100. We do have some ADRs potentially, and the S&P 500. So all the major indices, but no, not on the pink sheets.
Anthony asks: do you have an ETF that contains high quality plant-based vegan companies? It's a great question in this day and age of ESG.
Good question. That's really granular and specific. No, not at this time, but a good idea. But
you're always open to suggestions.
Exactly, it's a great idea. Andrew, I do have a question that came in. It's a good one, I think. Does it make sense to include both work from home and Moon within one's portfolio? And really comes down to one's investment objectives. But as I've touched on, both of these are different themes and have very little overlap. In fact, only one stock is common right now among those two ETFs, and that's Slack. So both provide different sources of returns. As I've alluded to, Moon is tilted more towards the smaller to mid cap names, like work from home is a little more large cap and mega cap focus. And I would consider both as satellite holdings within an overall equity portfolio.
Here's one for you from Edwin. Are these heavily shorted? Now, I don't know if Edwin means the names within or specifically the ETFs that we've discussed today. But either way, I always like to point out that, you know, buyers and sellers make up a market, right, Ed?
Yes, without a doubt. Are, you know, specifically, are some of these stocks or some of within the basket shorted? I'm sure they are. You know, we're long those stocks. So the short side, at least in this instance, is not something that plays into these two strategies because we're long the individual stocks. But yes, there is the ability to short these stocks, and there's varying degrees of short interest of these stocks, I'm sure. As you know, with Direxion, Andrew, we have also for short-term traders, tactical traders, leverage and inverse ETFs. And what does inverse ETFs mean? The ability to profit potentially if an underlying index, in our case, moves down. So we have leverage inverse ETFs, which is the opposite move of whatever that corresponding index is. So if you're interested in shorting and if it's appropriate for you, we have some tools that you could utilize as well, but those are involving broad-based indices and sectors, et cetera, not individual stocks.
And Ed, just to comment on that, those relationships, we took from Direxion in our Traders Academy. If you have a look into the education menu on the Interactive Brokers website and have a look under Traders Academy, you'll find an excellent series explanation of inverse and leveraged ETFs from Direxion, who kindly contributed to that series. Again, education and Traders Academy, and you'll find it there under investment products.
Yeah, you really developed a great tool for people to go to learn more about leverage and inverse with our content. It's easily accessible. I recommend anybody before they make a trade in leverage and inverse, go through the education section on those within Interactive Brokers, which they have a lot of our content on their site, and of course on our site as well for supplemental information.
Nigel asks a good question here. For WFH and Moon, how biased are they to the US verse, i.e. the universe of US stocks, as opposed to picking up global companies? That's a great question.
Yeah, they're predominantly both US. Moon in particular has some overseas through ADRs, et cetera, but they're predominantly US based.
And Diaz asks if you know the total net assets for the Direxion funds. That's a difficult question, but
of the firm itself, we're right around 22 billion in assets as of today. And I'm happy to say that the Moonshots ETF crossed 100 million a couple of days ago, and that was just in a couple of months. And our work from Home Etf is over 150 million. So these two thematic ETFs have definitely resonated. And of course, we have a larger franchise of tactical trading type of vehicles like leverage and inverse, along with the thematics, including Moon and work from home. And that total is around 22 billion currently.
And the final question, unless somebody speaks up with another question, is from Ramesh. Looks like our Canadian investor. He's looking for the equivalent ETF for Canadians, or I mean, well, let me kind of maybe speak to that first, Ed. But there is no, as far as I'm aware, there is no restriction on Canadians buying US ETFs, unless you know differently, Ed.
I would defer to you on this and somebody to check with their accountant in terms of any potential issues in investing in a US ETF as a Canadian investor. Do we have people that have done that? Yes.
Yeah, I'm pretty sure it's Maybe Ramesh's question is more to do with have you figured out an ETF that really nails the Canadian market, the companies, the Canadian companies that would be included in the wrapper? Maybe that's what he means, but I'm guessing you haven't done that one yet. Otherwise, we'd have mentioned it today.
We don't have any ETFs at present that are on the Toronto Stock Exchange. So.
And thank you very much, Michael, who's just chimed in, who's also Canadian. He says there is no problem for Canadian investors to buy US ETFs. So Ramesh, there's the answer to that question. And as I say, it's perhaps two different sides to the same coin. You know, it's can I do this as a Canadian, or do you have one that's kind of more suited to local companies? It looks like a question's come in here from Altan Jarel. What do you think of Starlink as a moon? I'm not quite sure I understand that one, but I'm assuming Starlink is a company, and he's wondering whether it would fit into the universe of the Moon ETF.
I'm not familiar with that company, or at least not currently. So I'd have to look at it, and in terms of the universe, if it would qualify. We have some criteria that I mentioned. So if it passed that screen, then it would be eligible, but it has to meet that criteria. So I'd have to look at the individual company and the trading volume, its market cap, et cetera, to determine that.
Very good. Ed Egilinsky of Direxion, thank you very much for joining me today. Thanks to all of our clients and non-clients for showing up at today's event. Some great questions there. A recording is being made of today's event and will be posted to the Interactive Brokers website later today. And oh, I see. So just shows how old we're getting, Ed. Doug says Starlink is part of SpaceX and it's not public. It's Tesla's Starlink. So it's not going to.
One of the reasons I probably didn't know about it, but interesting company though, say the least. And that's probably a whole separate webinar on space. Another interesting area for sure.
Yeah.
Thematic.
Yeah, maybe we'll go up on the SpaceX rocket up to the moon, on Moonshot and do a webinar from there.
I'm available if anybody has plans to go.
All right, Ed, I'm going to hand it over to you to close today's session. Thanks very much for joining us, and hopefully we'll see you in a couple of months' time to present the next event. It's always a pleasure, and I'll let you sign off and say goodbye. Thanks, everybody, for joining us. Over to Ed.
That's great. Just wanted to, again, thank everybody for participating today, and especially for Andrew and the Interactive Brokers team. Everybody be safe, and please visit our website if you're interested in these ETFs or looking at some other ETFs we have at Direxion, Direxion.com. With that, I will sign off. Be well, everybody, and look forward to speaking again soon to everyone. Take care.
Thanks, Ed. Thanks, everybody. Bye for now.